As an investor in stock market, everyone is looking for multibagger stock. Now, if you ask anyone about such great companies to invest in, you would hear names like TCS, Infosys, HDFC Bank, HUL, etc. These are great companies, there is no doubt about it. But these companies have already given multibagger returns in the past. So the biggest question is, can these companies continue to give such huge multibagger returns in the future as well? That's where company size plays a crucial role. For example, TCS has a market cap of 10 lakh crore. Now, can TCS become 10 times in the next 5 to 10 years? No, it's next to impossible. Now, as an investor, you can always invest in these companies, but you cannot expect multibagger returns in the future. And that's where I am in hunt of such multibagger companies that have the potential to become the next HDFC Bank or next TCS or next HUL. In this hunt, I am doing a lot of research to identify such potential future multibaggers. And today, I want to present one company that I have investigated. And the company is Polycab. Now, if I ask you, how many of you have heard about this name Polycab? I am sure many of you would have not heard about this name. So let's explore this company and see whether Polycab has the potential to become the next multibagger stock. Hello everyone, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. Polycab is India's largest manufacturer of cables and wires with a market share of 18% in the organized segment. Polycab is also one of the fastest growing FMEG company, which means fast moving electrical goods company, which include stuff like fan, lights, AC, washing machine, etc. While incorporated in 1996, the foundation of Polycab was laid in 1964 with a very humble electrical store with the name of Sindh Electricals. Polycab has got 25 manufacturing facilities all over India and has got a large distribution network of 3,500 plus distributors. If you talk about the retail network, Polycab products are sold at more than 1.25 lakh retail outlets all over India. As of today, Polycab has got a market cap of around 15,000 crore rupees. So basically it is a mid-cap company. If you look at the business segment of Polycab, the major business segment of Polycab is wires and cables. Within this, it has got power cable, control cable, instrumentation cable, optical fiber cables, solar cables, building wires, flexible wires and other cable. And the next business segment is FMEG, which is fast moving electrical goods. And it includes products like fans and home appliance, LED lighting and luminaries, switches and switch gears, conducts and accessories, solar products, pumps, pipes and fitting. If we discuss about the wire and cable segment, Polycab has got a very diverse customer base. For example, it includes customers from segments like IT, infrastructure, oil and gas, power, renewable energy, electric vehicle, etc. And the second business, which is its fast-moving electrical goods business, has been incorporated in 2014. And since then, this business segment is growing at a very rapid rate. Basically, Polycab is leveraging its strong brand value, distribution network, and strong R&D capability to strengthen its FMEG business. In fact, this FMEG business segment of Polycab has been growing at a CAGR of 47% in the last 5 years. So this is one of the key business segments that is driving the growth for Polycab. If you look at the revenue breakup of Polycab, you can see that in FY20, the 84.7% of revenue has been from wire and cable business, 9.4% is from FMEG business and 5.9% is from others. If you compare it with the revenue in FY16, then you can see that in FY16, 91.3% business was from cables and wires, 3.8% was from FMEG. So you can see that in next 4 years, FMEG business has grown from 3.8% to 9.4%. Overall, looking at the company and its diverse product portfolio, I would rate it 10 on 10. The first competitive strength of Polycab is its R&D competence. Polycab products are top class, and this is the result of their superior R&D capability. Further, keeping in pace with the emerging industry trend and consumer preference, Polycab intend to invest more in the development of energy efficient and specialized products. Led by its powerful legacy, strong distribution network, a wide range of consumer base and unique product mix, Polycab as a brand is well known in the electrical industry. Next key strength of Polycab is its wide network. Polycab has a robust network of 3,500 distributors and its products are sold at more than 1.25 lakh retail outlets all over the country. In the recent years, Polycab is trying to strengthen this distribution network by adding more distributors and selling product at more retail stores. Next key strength of Polycab is its experienced management. Polycab is in the business of cable and wires for around 50 years now, so it has got a very good experience in the electrical business. If we talk about the competitors of Polycab in cable and wire business, then it has got competition from KEI Industry, V-Guard and Finolex Cables. In the FMEG space, Havells is the number one company in India with a market share of around 14% and Polycab market share is around 8%. So Polycab has got a strong competition from Havells in the FMEG space. Overall, looking at the competitive strength and weakness of Polycab, I would rate it 9 on 10. Indian government has got a lot of focus in building the infrastructure of the country and digital revolution. So think about this. When you construct the dams, bridges, buildings and houses, what do you need? Well, one of the most important requirement is cables and wires to transfer electricity. And that's where Polycab is the number one company in India with a market share of around 18%. Then you also need electrical components like fan, light, switches, switchgear, geyser, cooler, etc. Polycab is strengthening its presence in FMEG space. So as of now, it has got a market cap of 8%, which is expected to grow in the future. India's structural drivers like rapid urbanization, rising incomes, evolving aspirations, digital inclusion, and increasing consumer awareness about safer and energy efficient products will drive India's consumption growth story in the electrical segment. You also need to understand how the markets are evolving. For example, today consumer focuses a lot on the product quality and the brand name. And due to this, the organized players in the industry are growing at a very fast rate. Polycab would also benefit from this. Another disruption in the Indian economy is in the digital space. India is slowly transforming itself into a digital economy. And normally we think that telecom as an industry would benefit a lot from it. But there is another segment that would also benefit from this digital revolution. It is the cable and wire industry. Polycab, being the market leader in this cable and wire industry, is expected to benefit a lot from this digital revolution. Hence, overall looking at the future growth prospect of Polycab, I would rate it 10 on 10. Now let's talk about the financials of Polycab. If you look at the revenues of Polycab, the revenues have grown from the level of 3,986 crore in March 2014 to the level of 8,830 crore by March 2020. So you can see that year on year, there is a consistent increase in the revenue of Polycab. If you look at the profits of Polycab, it was 89 crore in March 2014 and from there it has consistently increased to current level of 759 crore by March 2020. So you can see the graph, it has been increasing at a very fast rate. From 89 crore in March 2014, Polycab profits have grown almost 8 times in just 7 years. In the last 5 years, Polycab revenues have grown at a CAGR of 13% and the profits have grown at a CAGR of 36%, which is just phenomenal. Hence, on the growth ratio, I would rate Polycab 10 on 10. If you look at the operating profit margin of Polycab, you can see that in the last 7 years, the operating margin has increased consistently. From 8%, Polycab operating margin currently are at the level of 13%. If you look at the return on equity and return on capital employed of Polycab, it has been consistently increasing. In March 2020, Polycab return on equity was 19.8% and return on capital employed was 26.5%. The major reason for the increase in return on equity and return on capital employed for Polycab is due to its foray into the FMEG space. Since fast-moving consumer goods is a business-to-consumer space, the consumer generally pays upfront. This has resulted in increase in cash flow and better working capital of Polycab, which has eventually increased its profitability. In the future, as Polycab focuses more on this FMEG space, I expect this profitability to grow even further. Hence, on the profitability ratio, I would rate Polycab 10 on 10. If you look at the debt to equity ratio of Polycab, you can see that over the past 7 years, this has reduced significantly. From 0.31, the debt increased in March 16, but since then it has been decreasing. And in March 2020, the debt to equity of Polycab is 0.04. Considering the debt to equity of Polycab is 0.04, which is negligible, I would rate it 10 on 10. If you look at the management efficiency ratio, you can see the debtors day are consistently decreasing, which is very good. If you look at the inventory turnover, it has reduced from the level of 4.71 in March 15 to level of 3.25. If you look at the reserves of the company, it has increased from the level of 1,412 crore in March 14 to level of 3,685 crore by March 20. So you can see the reserves of the company has consistently increased. Overall, looking at the inventory turnover, debtors day, the reserves of the company, I would rate it 9 on 10. If you look at the shareholding pattern of Polycab, you can see that the promoters have got a stake of 68.53% by September 2020. The other breakup include FII has got 6.12% share, DII have got 12.2% and public has got 13.14% share. Clearly, high shareholding from promoters shows the confidence of promoters in the company. Now let's look at the valuations of Polycab. Polycab has got its IPO last year in May 2019 and at that time it was at the level of 640 rupees. Then it fell down to the level of 570 and then it increased to the level of 1182 by February 2020. And then due to COVID, the share price fell down to the level of 627. Since then, it has increased from level of 627 to current level of almost 1039 rupees. Polycab stock is currently trading at a PE of around 20, which is way below its competitors' average. For example, if you look at the Havells PE ratio, it is trading at a PE of around 67. If you look at the PEG ratio, which is calculated by dividing P ratio with the earning growth, the PEG ratio of Polycab is around 0.57. As a thumb rule, any company with a PEG ratio of less than 1 is considered undervalued. And Polycab PEG ratio is 0.57, so you can say that it is highly undervalued. Hence, looking at the overall valuations of Polycab, I think that Polycab is undervalued company and I would rate it 10 on 10. Overall, looking at the company and its product portfolio, its strong competitive strength, its strong financials and future growth prospect, I think Polycab is a fundamentally super strong company and currently available at an attractive valuation. And I think Polycab has got all the qualities of a future multibagger stock. So in this video, we investigated Polycab. What do you think about Polycab? Do let me know your thoughts in the comment box. Also do let me know which video you want me to cover in the future. I will see you next week.